All right, guys and gals, back in the action once again. Time to get back to work. Monday evening, March the 30th, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best levels of support and resistance and the best entry setups coming for tomorrow's trading session. And I got the charts all prepped up behind me. Got some oil, some S&P, some NASDAQ. I got the calendar all ready. Got a bunch of big news tomorrow. I want to make sure you know the schedule for tomorrow as well. I got a great video in store for you guys and gals. Kicking off this third week of quarantine here in Los Angeles. Are you getting stir crazy yet? Just a little bit. That's all right. We're going to have a great video here for you guys tonight. Before we jump into the video, though, don't forget, make sure you subscribe to our YouTube channel. I don't want you to miss the next newsletter video. Great information we cover every night on this video, so make sure you subscribe. If you have any questions for tonight's video, drop those questions in the comment section below. I'll be checking those comments after we publish the video tonight. And as always, if you tune in every evening and you love this video newsletter, help me feel the love. Hit that thumbs up button for me if you would. Tune in every evening. Hit that thumbs up button for me. Really appreciate you guys spending your hour with me here every evening on this video. But enough about the introduction. Time is money. Let's get this video going tonight. I'm going to kick off the session first by taking a look at the economic news calendar. I want to make sure you guys know what the schedule looks like here for tomorrow and for the rest of this week. Now, as you know, we're going into the end of the month of March right now, and I think we're all excited to get this month behind us so we can start staring down the barrel of this end of quarantine here. I won't get into that too much here tonight, but we do know we have the end of the month right now, all right? We're going into the end of the month. Tomorrow, of course, is the last day of the month. Anytime we have the end of the month, we know we're expecting to see increased volatility. So remember, as the markets get more whippy, as they get volatile into the end of the month, remember we're going to slow down our time frames, we're going to widen out our stops and targets, and we're going to cut our position sizes down a bit, right? That's our continued strategy whenever we have increased volatility. So a little bit slower chart time frames, a little bit wider stops and targets to absorb some of that noise, and of course we'll cut down our positions to be able to absorb, right, all the extra risk. Now, there's also extra reward involved in these markets, but you got to manage the risk first. So as we go into the rest of the, obviously the rest of the month here, tomorrow is the last day of the month. I do want you to be aware that we're going to probably see some more volatility as we finish up the month tomorrow on the 31st. Now, speaking of tomorrow, what do we see here as far as news goes for tomorrow? Got a bunch of news you can see here. We got Chicago PMI, get the home price index at 9 o'clock, Chicago PMI at 9:40, and of course that consumer confidence number at 10 o'clock. Now I know there's this dark cloud, right, kind of hanging over these markets right now about, are they going to go more stimulus? Will the curve, flatten out on this virus? So, I don't need to tell you that there's a lot of known unknowns out there right now. Just turn on the television right now. Last night, I think it was before the U.S. President Trump extended the, what do they call it, social distancing until the end of April, I believe, in Italy, kind of one of the epicenters of this crisis. They extended out their lockdown for one more week as well. So there are new headlines coming out every day. That is very much a known unknown, kind of a dark cloud, as I'm saying, kind of hanging over these markets right now. But, again, we got some big news tomorrow. I'm not sure how much the markets will care too much about it, just because we know everyone's kind of watching this, this curve, right? Will this curve start to flatten out tomorrow? That's going to really be, I think, the most important thing here. Will we start to hear from states in and around the New York, Pennsylvania, will we start hearing that New Jersey, New York, Pennsylvania area start to calm down a little bit? Will we start to see it spread into the Midwest? Here on the West Coast, we haven't really seen a lot of it yet. There's not that many cases on the West Coast considering how proximity, but will we start seeing more of that here? That is what we're all watching here right now. What will the virus do as it grows? Will it calm down? Will it continue to escalate? That's probably going to be the most important factors as we go into tomorrow, whether or not we're risk on or risk off. So we definitely have a lot of news tomorrow, 9 o'clock, 9:45, 10 o'clock. I'll be there with you guys, obviously. We open up our trade room every morning at 8 a.m. Eastern time. We trade all the way through to 11:30 together. I'll be there with you guys. By the way, I'll put all the links, by the way, to get registered for tomorrow morning's trade room. You got to be a member. You can grab all the links in the description of this YouTube video to get registered for tomorrow morning's trade room. But obviously, we'll come in tomorrow. We know we got some big news tomorrow. We know we have some more volatility because of the end of the month. And what will the headlines be tomorrow when we wake up tomorrow, right? What's happening as far as this virus spread? That is really going to be what everyone's waiting on here regarding just kind of how the markets are probably going to flow as we go into the end of the month. Later on this week, we've got some big news coming later on this week. We got some construction numbers, we got some trade numbers and factory orders, and we got that employment number later on this week. So the hits are going to keep coming here. Hopefully we can get some good news. I'm pulling for some good news out of New York. I'm pulling for some good news, right, for all the folks in Italy, in Europe. I'm pulling for us here as a civilization that we'll start to see some at least some positive bending to that curve. But make sure you tune in, right, and we'll talk more about this tomorrow. So 8 o'clock Eastern time, don't forget, in our trade room tomorrow morning, we're going to do this together, right? We'll be trading whatever the markets give us, whatever the virus headlines are, we'll be there to trade it together here tomorrow. I've got all the charts all ready to go here for us. Speaking of tomorrow, I got some oil, some S&P, and of course some gold. Let's see here. Which one should we start with tonight? How about the S&P? S&P was the big mover of the day today. What do we know about the S&P right now? I think it's pretty straightforward. We know we have a bull market. You know, this is what I was talking about. You know, this morning we come in and we're seeing the curve start to flatten as far as the number of new cases that are coming out in Europe and the U.S. And people, I think right now people are looking for any excuse right now to buy these equities because it just got crushed so badly there the last few weeks. So, you know, this is an example, right? We saw some good headlines coming out of Asia and Europe, and of course the S&P, even after that gap down, the S&P still rebounded because of it. So people are definitely looking for a reason to buy it, but we gotta keep getting good news about this virus. We also know where we are too. I think it's really important to keep in mind where we are right now. We're running right into a major level of resistance overhead. And what you want to remember is that no matter what market you're trading with, anytime I see a strong move in one direction, I always expect to see a two-legged pullback and a retest of the high. Now, this could be a daily chart, a weekly chart, or it could be a little tiny tick chart like I'm using right now. But you'll notice here, right, you get that big move up, you get that one leg, that two leg. Yeah, it's pretty dramatic, obviously. Like I said, into the end of the month, we expect more volatility, but now they're trying to get that retest of that high. So it's very important that A, we know we're bullish, we want to be a buyer, but B, we got to be careful where we are buying. We're buying right into a major top. Now, that's not to say we can't go through that. We got some great levels waiting here overhead, up around that 2664 for the runaway zone, and then really the big number there at 2716. That's the big level all the way back up there. That's where they really want to get to. They really want to get to that, I would imagine, that 2716 level, and then the next level up from there is going to be that, what is it? It's like, yeah, it's all the way up. So there's some pretty hefty levels over there, as you can see. But we've got to make it through this key level of resistance here right now, that 2634, 2635. So we know we're bullish, but we know we're running into some headwinds here overhead. What else do we see here? I think what might be the most important clue is the fact that we seem to be consolidating. There are two big clues on this chart that tell me we're getting consolidation. One is, you'll notice how we have the trend line off the high, right? The rising trend line here. As you can see, we're getting tighter and tighter and tighter as we go. Another thing, the first that stood out though when I opened this chart here this afternoon for lunch, was I noticed that you can see all of these moves they're getting a little bit smaller. See that? Every single pullback, every move is getting just a little bit, everyone's a little bit smaller. Now, this is an old school technique, right? This is an old school technique. What happens is when markets get narrower, right? We call these squeezes, right? These were always made pretty popular, right? A couple of years ago, about 10, 15 years ago. When the markets start to get really tight like this, what happens is it kind of gets some pent up, momentum here. And oftentimes we can see some real strong breakouts. So the most important thing I think right now is we know we're bullish. We know we're up around some resistance here, but we're starting to get really narrow. And we start getting narrow like this, obviously there's no way to, well, maybe not too obviously, but there really isn't any way to predict these breakouts as far as direction goes. We just want to make sure we're ready for this. If the market breaks down, if the market breaks up. If it breaks down against me, I know there are going to be buyers looking to dig in their heels down here, and I want to be a buyer as long as those sellers can't grab and hold on to this. If the market can run higher, I just got to make sure I get enough evidence of a true breakout, and then I can look for a couple key patterns as we go higher. There's also a chance that with this overhead resistance, we may get a little bit of chop and go sideways here too. So I want to make sure I'm ready for that as well. So I think we got a pretty good plan here. We know we're bullish. We want to buy at support. We know we're at resistance. We don't want to buy too high, and we're getting narrower by the moment here, which means you've got to be expecting to see a relatively big breakout of this range eventually. I want to make sure we are kind of mentally ready for that breakout. You know, we talked last week about deep pullbacks, how to trade those. This will be another way to use that same technique that we talked about in last week. So first of all, I wouldn't be surprised here as we go up into the measured move, as we go into resistance. I wouldn't be surprised here if this market starts going sideways here overnight while we wait for more updates out of Asia and out of Europe. If we start seeing these moves going sideways, if the moving average starts to flatten out, we start seeing double tops, double bottoms, this becomes a range market with a bull bias. Whenever I say the word range, you should be thinking failures, fade the breakouts. So whenever I see a range in a chart, I'll look to buy underneath the range with a pattern that I call a two-try failure pattern. It's a really simple pattern, and it makes sense because what you're doing is you're waiting for a pullback off the high. You're waiting for, in this case, counter trend sellers to sell off the moving average. Right? Every time those bears have tried to get short below the EMA, they've failed. So I have no reason to think that's going to change tomorrow, and we'll look to buy right into those stop losses. So if we see this thing starting to go sideways here, I'm going to make sure I wait patiently and use that two-try failure pattern underneath the low of that range. And I'm hoping, as you can see here, that I can combine that with some of these key levels of support. For example, I've got my trend line off the high. I've got this little kind of hidden trend line here, that kind of hidden channel there. That's a great level of support. But I'll tell you, the best level of support I can find right here is a combination of that trend line there, right? Reversal line, swing. This is the hot spot. That is the hot spot right there, that 2580 to 2560 area. So if I see it go sideways up here, and it might even be a little bit higher, right? They may keep kind of grinding higher here, go sideways, wait for that pullback, wait for those sellers to try to sell off the EMA, and I'm buying right into those stop losses. Now, we may not get that sideways momentum. We may just see a pullback into our buy zone, so to speak. We know we're bullish. We want to buy at support, but when a market pulls back really strong like this, it's very difficult to kind of time your entry. It can be difficult to figure out how far back will this thing really go. So I never try to pick a bottom on it. Picking a bottom is really difficult. What I do is I just wait for the bears to come in and try to sell that next pullback, and I use either a failure into a pullback combination. There are two patterns to look for. Again, I don't try to mess around with predicting the low of that move. That's very difficult to do, to time the exact bottom. We don't need to be perfect on the exact bottom. I wait for the pullback. I wait for those bears to come in and sell the pullback. I now know right where their stops are, waiting right above that high. We're buying into those stops. And then if you don't feel comfortable with the failure, you can always grab the pullback that comes there afterwards. Now, we may also get a much deeper pullback than this. We've got this big gap, and of course the gap has been filled. But anytime we see a gap between Friday's close at 5 o'clock and Sunday's open at 6 p.m., anytime we see that that gap there, we know there's potential. This is going to be a magnet. So if we do see it, I'm not, it could happen. It's unlikely at this point. But again, with everything getting so consolidated here, who knows? We may not see it bounce off that area for a failure. It may really make a nosedive here. And to be a buyer in that situation, I'll break out the big guns. I'll wait for a nested failure. In other words, I'll wait for those sellers here now to try once, try twice, then I know where their stops are. I can buy into those stops. And remember, a lot of times, we call them nested failures. A lot of times these nested failures, you'll get the failure, but then you won't get the deep pullback. The pullback won't pull back all the way to the moving average to grab it. So instead what you'll do is you'll grab that trap pattern. I call it a 2-try trap. This is a very common sequence, a very deep pullback when markets get narrow like this, right? Price consolidation predicts a breakout. We just don't know what direction is going to break out in right now. If I can get that strong pullback though, 1 try for the bears, 2 try for the bears, buy into stops. Ideally, I'd like to buy the pullback to the moving average, but don't hold your breath on that one after such a deep pullback. A lot of times it'll rip higher. Look for what I call a 2-try trap pattern. Now, failure patterns, trap patterns, we've covered a lot here so far. I cover all the details of these patterns in my free trading course. I'll put a link in the upper right-hand corner for you. So grab that link, get registered for our free trading classes. You'll see lots of examples of how we apply these setups to our favorite markets. Obviously, the best thing is to come out and do it with me tomorrow in the trade room. But if you're not there with me tomorrow, the next best thing is to grab that link up there for that free trading course, that we can learn all these setups. And at the very least, you can practice them on your own and of course make the most out of our time together on this nightly newsletter. And again, I'll put membership links, I'll put free course links all in the description of this video. I'll also drop the links below the video tonight on the trading blog. That way we got that covered. Okay, so now we know how to trade the pullback. Now, you might be wondering, if it goes to a deep pullback, at what point do I start want to be a seller? What does a reversal look like, right? What does a reversal look like? Well, let's go back to here. Let's look at this one right here, because this was a very strong bear move down, and then see how they went 1, 2, 3 off the moving average. That's what you want to see. You want to see that 1, 2, 3. In this case, it's a bull market. So I want to see a 1 strong move down, 2 would be a pullback to the moving average, and 3 would be a jump off the moving average. I call this a 1, 2, 3 reversal. The key is you've got to get that strength off the pullback. I don't really care how deep the pullback is. I really don't. It needs to hold that pullback. Now, once it holds the pullback and we jump, just like the buyers had their 1, 2, 3 going higher earlier in the session today, now what I'll do is, I don't want to chase after it. I'm going to mark up that low. I'm going to mark up that major high. Okay, the major high, that's where the good stuff is. And the next time it pulls back to that high, you got to get aggressive and sell it. This is one of those patterns where you don't want to predict the reversal, because again, a lot of times it'll fail and go right back up to retest the high again, right? What you want to do is wait for that 1, 2, 3 reversal and then draw the channel, hidden channel that is, and we're selling off that high. Now, sometimes what happens is the market just collapses and keeps on running. If it keeps on running lower, I'll look for one of my favorite. It's a little bit more aggressive. It's called a 2-try trap pattern. This would be if this market just tanks and just keeps, you know what I mean? Big red candles, just keeps on running as we go lower. If I really see a strong shot lower here, more than just a strong pullback, it'll be a strong pullback, it will keep on going, right? That's the difference. Once you see a strong pullback that keeps bleeding lower, I'm waiting for that shallow pullback off the moving average. And then as soon as I see that shallow pullback that won't pull back to the moving average, get a lower low on it, that tells me now trap. You want to sell 2-try, again, I call this a 2-try trap pattern, right? To sell high on this target, of course, at that point, be back down to retest that low. Those are 2 patterns I'm watching for on the reversal. So now we get that all covered here. What if we go higher? Let's talk about 2 breakout patterns as we go higher. I call them breakouts because of where we are. We don't just need to be in a range of a breakout. We're going right into the top of that big range here from last week. So we have to qualify these as breakouts. There are two breakout patterns I like to look for. We just talked about them for reversals. The first one is called that 2-try breakout. It's a strong move up, a shallow pullback that normally what it will do is it won't pull back to the moving average. It'll make a higher high. Once you get the shallow pullback that doesn't touch the moving average and you get the higher high, and don't get me wrong, it oftentimes does touch the moving average, but the clear giveaway is when it doesn't, when it barely grazes that moving average and then gives you a higher high. Once you see that, mark that low and look for that trap below that low. My objective on this now is up inside my runaway zone, right, my levels of resistance as we go higher. Or the much more conservative pattern would be if we didn't get the strong break higher. If we get a strong break higher, shallow pullback, trap, and go. But if we don't get a strong break higher and it jumps up, you want to wait for that pullback to hold. That will give me a 1, 2, 3 breakout. I'm going to mark up that high, mark up that low. I'm not going to mess with stuff back here. I'll just simply treat it right on this area here. And then, of course, looking to buy, right, the low of that hidden channel. So we're really looking for the same basic patterns if we reverse or if we go higher. I've got targets I'm watching for overhead here. The big juicy target right now for these buyers is at that 27.16. I've got some smaller levels overhead at 64 and at 93 here as we go. But the S&P, again, we're really kind of all waiting here overnight to see what the next headlines are going to say. How does the curve look? We may be seeing a reversal. We could see continuation, or we may see some chop and slop here, but either way, we got you all covered. Let's keep going here. Got the S&P looking good here right now. How about some oil? I want to save the best for last there on the gold. How about some oil here right now? Boy, oil, they got a big problem with the price of oil right now. I'll tell you, today we came in, prices are below $20 a barrel. What a psychological level that $20 a barrel area is. I mean, this is for whatever reason, there's a big difference between 20 and 19. 19 just sounds like some penny stock. You know what I mean? It's almost weird to say it. If you've been trading oil like we have for so long in our trade room, it's, we're used to 60s, 50s, 70s, 80s. This is a very interesting time to say the least. So I'm sure I'm not the only person out there. This $20 a barrel area, you can definitely see people were taking profit there. They were buying off the low. This is where a lot of long-term investors, I get these emails all the time, and a lot of people will tell me, Joe, why shouldn't I just buy right now, remove the stop loss, and just put a target back at $50 a barrel? Why not do that? The answer is you don't know how far this is going to keep going. I was getting emails when we were at $40 a barrel and $30 a barrel. Joe, why don't I just buy the low here right now and it's got to go higher, right? It's got to go up. Yeah, the famous last words of your trading career. It can't keep going. Oh, yes, it can. Oh, how far away from zero are we right now? We might be switching up from crude oil to water futures. What do you think the odds are we're trading water futures on the CME group by 2021? I'm kidding, but I'm trying to be serious here too. We can't just say it's gone far enough, unfortunately, right? We have to have some sort of support, some sort of momentum. So if you're thinking about that right now, why can't I just buy this right now and just put my stop? Well, first of all, it's a futures contract. It's going to roll over in a month from now. That's going to be a nightmare trying to manage that rollover. The second thing is we just don't know how far. We don't know how far the Saudis and the Russians are going to let this bickering go back and forth. I assume that's what's continuing to hold up any additional further production cuts. So anyways, big psychological level here on the 20. I definitely would recommend against the old saying of it can't keep going lower. Oh, yes, it can. And that'll be the last trade you take on your brokerage account before it goes belly up. Because, again, the markets can keep going lower longer than you can keep putting money to avoid a margin call. So I'm off my soapbox right now. What do we know about oil here? First of all, we get a big gap down right at the beginning of the session. And again, this is not your average gap. This is a weekend gap. And weekend gaps, I leave those gaps on all week. So this will be on here until the closing bell on Friday afternoon. Come hell or high water, that'll still be there on Friday morning's trading session. And again, don't forget, we're going to trade this together every morning, right, in our trade room Monday through Friday. Now, we know that those gaps, those big gaps down, right, we know that, again, the gap's going to be a magnet. Like we always talk about when there's a weekend gap, I'm going to leave that right there. And if the buyers can grab this, they're going to try to go right back to fill that gap. Okay, that will be a magnet for us for the rest of the week this week, maybe into next week, depending on, right, how well it performs. The most important thing right now, though, is we cannot just buy this market because there's a gap on here. We have to look for the proper entry setup. What else do we know here? We know that we had that big gap down into what looks to be a range. Now, in all reality, it was a channel earlier on in the session, right? In our own defense, it was a channel, right, going lower here. But for the basic purpose of this video tonight, it's pretty much a range, right? Overlapping candlesticks. If you were to put a volume profile on this, all the volume be piled up right in that middle. So we know there's also a big magnet right in the middle of this range, right? What are ranges? Ranges are balanced areas. They are price magnets. So we know right now, we have a bear momentum. We also know we get a couple magnets we're watching, right? The middle of that range, the back, right, to fill that gap here. What else do we know? We get a big overshoot of that range, right? That big overshoot. Now, this is something we can start to sink our teeth into here, because when I have a range, again, it's a balanced market. When a market goes out of balance, imagine a pendulum swing, right? Usually pendulums are like this, where they're straight up and down, right? We got a balanced area there. You move the pendulum a little bit to the left, what's going to happen? It's not going to swing back to the middle. It will, but it will keep going on the other side, right? You've seen these pendulums before, right? They go from one side to the next, and they swing back and forth. So imagine now this goes on its side. Okay, there's your pendulum right in the middle now. We swing lower. We're probably not just going to stop in the middle. We're going to probably keep going. That pendulum will swing back and forth as we go. Take the pendulum, put it right on its side. This is something we can definitely get into here, because now there's a good chance that using that magnet overhead, this market continues now, at least in the short term, until we see the pendulum come to an end, right? They'll try to get that gap, and then back down we go from there. So we know we're balanced. We know we're bearish. That's the big clue here right now. We can't just buy this. We need some sort of catalyst, some sort of setup to be able to maybe trap in some of these sellers. I think that's the best way to trade this. And as you can see, what I did here was I've gone in and found a hidden channel. I'm drawing off these lows. I've got it off these highs. I'll bet you're going to have a lot of sellers. They're going to see this channel and they're going to sell off that high. And what I'd like to do is buy right into their failure, buy right into their stops. We need to have we need a catalyst. If I'm going to go against the overall direction, I need something to light this fuse. You know what I mean? I need some stops to buy into, because when you run the stops of these sellers, what's going to happen is they become buyers. So how do I do that? Well, we just talked about a deep pullback on the oil. Remember how I said on the S&P? Remember how I said on the S&P, if we get a shallow pullback, it's a seller failure and back up. But if it's a really deep pullback, what do? We respect the momentum and we use the nested failure. It's just a simple adjustment. It's just, instead of one try, it's two tries. So when I look at this strong move down, you can already see this coming a mile away. I can see it one try right there. I'm looking for a second try, and I would love to get this trap low here, right below this low. This, in my book, is the cat's pajamas. This is the bee's knees when it comes to buying low and selling high in a range-bound market. I call these, well, again, it's basically a nested failure, but it's got one extra add-on because the trap. What do we call these guys? We call these crown reversals. They're reversal patterns that used the momentum of the sellers, trying once, trying twice. Again, I'm anticipating the range acts as a magnet. I'm anticipating the pendulum swinging back in the other direction. And I'm also anticipating here those bears now coming in and trying to sell off that high. Because after all, I mean, there was a channel pretty much all morning and bears were selling off the high of that channel. So I'm hoping that they'll draw a wider channel here for us. And I'm hoping that if I can get these bears now, try once, try twice, I can grab that trap low for that crown reversal. Now, there is also a chance here that we go back up into that range. If we do go sideways inside the range here as we go, let's get a little bit more intimate here on this chart. Remember, you don't want to trade inside the range, but if I do end up back inside the range here and start going sideways, that becomes a bullish bias into a range. Whenever I say range, you think what? Failures and breakouts. Failure patterns. Want to buy underneath the range, one try, two try back up. Breakout patterns. As we go higher, a 1, a 1, 2, 3 breakout, mark the high, mark the low, buy off that low, or, what was the second one again? Strong move up, shallow pullback, higher high, trap low. Now we're on to something here. So if we do start to get that range, we know some patterns we can use to capitalize on it. Now, what if they pummel this thing lower? Right? That is very much a reality right now. If we make another run back to that low now, I'm going to look for that same crown reversal to buy off the low. One try, two try, trap and go. Again, we call these crown reversal patterns. Again, you can see a lot more examples of these in that free trading course. And again, you could also trade it with me tomorrow as a member of our trade room. All the links, the description of the video. But if they keep going lower on this, you got to remember, I personally, and I've been doing almost 15, I've never seen prices these low before, right? So there's no real precedent. There's no previous levels. I mean, you've got to go more than a decade back there to find levels this low. 19 for crying out loud. So what I would expect is if we get that run going lower, it's a buy with a crown reversal. Or it could also be a 1, 2, 3 reversal, mark the high, mark the low, buy off of that low. That's your 1, 2, 3 reversal pattern. If we keep running and grinding as we go, now that becomes a spike in channel. Spike in channel patterns tell me to look for a pullback and sell the base of that channel. So we're ready to go if this thing wants to keep going lower, but don't ask me for targets. The only target coming up next would be 15, 10, 0. You know, I was half joking about the water futures, but what do you think the odds are of that, right? Post those in the comment section below. I'd love to know what your thoughts are. Maybe we should get with the CME group and get somebody going on water futures. All kidding aside, though, there's no real targets as we go lower. Now, what if we rip higher here, right? What if the market rips higher here? If we do end up racing higher, we know where they're trying to go. They want to go up to that pendulum swing. So what if we rip higher? If we rip higher here right now, this becomes pretty easy. I'm going to mark up that high. I'm going to mark up that big low, buy that first pullback off the low of that hidden channel. Or maybe we don't get that deep pullback. Maybe it just rips higher. We get a shallow pullback, a new higher high, and we get that little 2-try trap. Okay, that is also potential. Okay, so be aware of that. We may get that rip higher, get that 2-try trap pattern. At the same time here, we may also sit inside that range, right? We may see this market jump up. Now, how do I sell up here, right? Because after all, we're a range-bound market. Yeah, I know I can go 1, 2, 3 breakout and I can buy the low of that hidden channel now. But what if we go sideways in here? What if we jump up? How do I sell this thing? Well, you got to remember that momentum be very strong. If we get above this range here, the only way I can really sell this is a nested failure, a 1, a 2, and back down from there. The only way I could really get away from a nested would be if we, for example, like got a rip going higher and then came back into the range again. You know what I mean? If we did get the run all the way up to the pendulum swing, and we come back into the range, now I'm bearish now back into that range. And now whenever I say range, you say failure, we look for the 1, the 2, the failure pattern back into that range again. So just be careful about that. We know we want to be a seller up here, but if this thing just races higher on this, that's a whole lot of bullish momentum. I'm at resistance, but I can't just sell at resistance because it's resistance. I have to wait for those buyers now to come in, give them once, give them twice, and then I can sell back down from there. Now, I know I'm covering a lot of this, but remember, these are all failure patterns or breakout patterns. I talk about them in the free course, which I'm linked up there, right up top, or grab all the links and get registered and come do it with me tomorrow in the trade room. So oil's looking, again, it's a little bit goofy right now because of the prices, but you've got a really good potential crown reversal here setting up if you're in the early part of the Asia or London sessions as you run higher here. We may also see it just keep bleeding lower here as well. So keep yourself disciplined. I don't want to hear any of that. Well, it can't keep going lower. I don't want to get any of those emails here this week here. Yes, it can keep going lower, and you're going to spoil it for all of us if you start blindly buying it. All right, let's keep this thing going here. How about some gold? Over on the yellow metal. Now, don't forget, we did roll over last week. So if you missed this last week, we went from the 420 contract to the 620 contract. Now, I'll be honest, gold's a bit of a pain in the rear end whenever we go through rollover. It's really not the easiest market to roll over. A lot of charting software has difficulty on rollover. My personal opinion is you got to really be careful on rollover day. But usually after a couple days, you'll start getting enough data. The reality is the rollover schedule is all over the place. It's always different. It's not always different every year, but every couple of years it's a different rollover. So it can be challenging for charting software and new traders to get rollover correct. So when you go through rollover on gold, don't be surprised if that means we get some real sluggish markets for a couple days after rollover. Not to worry, we'll trade other markets during that time. Just be aware though, gold's going to be a little bit rough around the edges in and around rollover. And it's because a lot of people struggle to kind of figure out, okay, what contract's next? Sometimes they skip. And keep in mind, guys, when I talk about contract rollover, we do a full breakdown on rollover and contract expiration in our beginner courses, right? I know everybody thinks they're too cool for beginner school, right? But we all got to build our foundation somewhere. And I realize, nobody wants to be called a beginner, but if you don't know rollover, if you don't know the difference between rollover and expiration, you are a beginner. I'm sorry. You can know all the patterns, but if you don't know the business you're in, it's again, makes you invest the time. Our beginner classes cover all of that. But I get a lot of times where, someone will call my office and say, I've been doing this for 3 years. And I say, well, how'd rollover go? And they're like, well, yeah, I don't know about rollover. What is that again? And I'm like, what do you mean you don't know about rollover? This is futures we're talking about. That's like owning a pizza parlor and not knowing about marinara sauce. You better know your ingredients. Anyways, off my soapbox here. What do we know about gold? Right? We're out of rollover. We get a range. Big, right? Big bull move up. Big bull move up into a range here tonight. Okay, what does a range tell me? Ranges tell me they're balanced. That's the first thing. Right? What are ranges? They're balanced markets. Okay, balanced markets tell me what? They tell me buy low. They tell me sell high. And they tell me to avoid the middle. Now, when I say range, what do you think? Failures and breakouts. When I say range, you think balanced. When I think range, you think magnet. Right? When I think range, you think buy low, sell high. Failure patterns and breakout patterns. Seller failure patterns, buyer failure patterns. I call these two try failure patterns or breakout patterns. 1, 2, 3 breakouts. Buy the low, right? 1, 2, 3 breakouts. Sell the high. Whenever I say range, you say breakout patterns, failure patterns. 1, 2, 3 breakouts, 2 try breakouts, failure patterns, nested failures, and 2 try failure patterns. Now, most important clue about this is the triangle. Okay, triangles are a little bit different than ranges. Most ranges the market will jump up and go sideways. Okay, and there's no real, this in theory could go on forever. We have a triangle, right? And a triangle means there is going to be an expiration to it. So as this thing gets narrower, and we talked about this, right? As the market gets narrower, what happens? It's almost like a jack in the box, dun, 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 right? All of a sudden, bam, right? You get that big breakout. So triangles are a little bit different than rectangle ranges because there is some sort of ticking time clock here on this. What else do we know about ranges? We also know that when it comes to triangles, the key is the edges. If there's one trick I can give you about trading triangles, it is to wait for the edges. And you'll notice, right, because on this chart, we go up, we go back, we go up, we go back, we go up, we go back. You'll notice the edges, right? Edges there, edges there, edges there, edges there. The key is you want to stay out of the middle and focus on those edges. In my experience, you'll get a lot of false signals in the middle of these ranges, but if you can just stick to the edges of this, you'll really be in better shape. So I'm marking that low, I'm marking that low, I'm marking that high, marking that high. I want to stick to buying the edges below, selling the edges above. And then be aware that once the clock strikes zero, you're going to probably get that breakout lower so you can buy it, or that move higher so you can sell it. Or it'll break through and hold, right? It'll break through and hold for a breakout pattern. So where are my edges on this chart right now? Where are the edges that we need to worry about? I've got this blue line marked up right there to point out where the big edge is. And you'll notice this last little pullback we got right here, they actually never got any edge, right? Watch how we call it. Up, back, up, back, up, back. Edges are there, edges are there, edges are there, and there. I want to get down into this area, down inside my battle zone. I don't want to be buying right up inside the no trade zone. So the idea is pretty simple. We know we're looking for failures. My big question is, do I pull back into the first battle zone where I can get a simple seller failure into bullish pullback combination? We've talked about this quite a bit. I won't go over this much more right with you here. It's a two-try failure into a pullback combination. Or do we get a much deeper pullback here? And of course, at that point now, again, very strong bull trend here. So I'm not worried about this being a bear market until they hold that pullback. Once they hold that pullback, then absolutely find your new channel, and we're selling off that new channel high. But I'm not in the business of calling reversals. That's for sure. Right? I'm not in the business of picking tops and bottoms. I don't try to predict reversals. I'm not trying to guess how far this thing will pull back so I can brag to my buddies on Stock Twits I picked the bottom. There's no first place ribbon for picking the bottom. All that matters is the end of the day, at the end of the week, at the end of the month, are you in the green? And are you doing it without a lot of stress and anxiety? That's what matters with your long-term trading career. Can we do it easy? It's so stressful as this market's pulling back, try to pick that bottom with, God knows whatever indicator. What I'll do is I'll wait for one try. Remember, this is a deep pullback now, secondary battle zone, one try, two try. Once those bears have dug their own graves, so to speak, with those two tries, now we know where stops are. We can buy right into those stops. And remember, a lot of times these things will snap as they go. Look for that shallow little pullback, that cute little trap, that little trap low. It's a friendly little trap low there, as my good friend Bob Ross would say, right? It's a happy little trap. I want to buy that trap low, and again, we're trying to go back up into that magnet once again. Those are two scenarios I'm watching for. I want nothing to do with the middle. Now, here's the challenge. How do we sell off the high? We're bullish, right? So how do we sell? It doesn't matter which level I get to. I get up above these highs. What do we need? We need one, we need two, and go from there. You can see a great example of that back here. We see these quite often again, you're going against the overall trend. We see it go up, the buyers try once, the buyers try twice, and we sell it back down. right? That's the key when you're going against the trend direction. So again, we're above the range. I want to be up inside. Again, I want to be up inside here. Let me reset the drawing tool there, right? I want to be up inside or up into those edges, go up into the edge. Now again, right, we're probably going to go straight up, but jump around a little bit here, right? Go up, buyers try once, buyers try twice, and then we'll look to sell back down into that trading range. We could also look for a breakout too, right? Especially if we see a strong move higher here. Moving average comes over, hold the pullback, and jump off the EMA, mark up the highs, mark up that big low, and that's going to be our pullback to the low of that channel. Now, I'm simplifying this. It's a 1, 2, 3 breakout into hidden channel pullback. If you were to zoom in on that area right there, this is usually going to be on a faster time frame, going to be a failure into pullback combination. That's usually what you're going to look for in and around the low of that channel. So I call it, again, to keep it simple, I call it a 1, 2, 3 breakout into hidden channel pullback. But in all reality, you're going to be below the moving average when you get back to that low of that channel, and you want to look for that seller failure into 2-try, right, pullback pattern. And then again, we might see a strong move up, shallow pullback, higher high, right, trap low. That will still be a relatively reliable setup as long as we get enough strength as we go. And then I think it's definitely possible, we're watching all the headlines right now. There's a decent chance we get a string of bad news here this week. The market jumps up. It runs right into all of these major levels of resistance, and they kind of get pinned to the highs. So if we start seeing the range move higher, you will see that all the time in gold. Gold's notorious for doing that. It loves to have a range down here, and then you'll see it, kind of freak out and jump into a range up there, and you're basically just kind of, moving target. Keep watching these ranges, keep buying below them, right? Anytime we see a strong move higher. So this thing jumps up and kind of gets pinned up around these highs, like we know these, very emotional markets like to do right now. If they get pinned and we start seeing it sit there going sideways, range bound market, what do you think? I want to be a buyer because we're bullish at that point. We're still bullish. I want to buy with that 2-try failure pattern below that range. All right. I think I've covered enough of this here tonight. I think I've saturated our brains here tonight with all the good setups we're looking for. I'm watching that crown reversal, that trap low on oil. I'm looking for a nice deep pullback here on the S&P and stay out of the middle of that gold wedge, that gold triangle. Don't forget, though, the most important thing for tomorrow, make sure you come out and trade it with me in the trade room. Our advanced members, we get together every morning, 8 o'clock Eastern time, and we execute the plan together. Tonight, I'm prepping all the charts, getting all my levels in place. I'm sharing them with you, but the real stuff we're doing is tomorrow morning, 8 o'clock Eastern time. Again, I'll put all the links in the description of this YouTube video. The free trading course will be there. I'll put the link to get registered as a client to join me tomorrow in the trade room. Don't be afraid to call me in the office if you have any questions as you get registered overnight tonight, or use that live support tool on the right-hand side. And as always, if membership isn't quite right for you, we get a lot of great flexible options to get started with, so don't be afraid to call me to go over those. Or at the very least tonight, though, grab the free trading course as part of our free trial. That way, when you come back and see me again tomorrow night, you'll know all the patterns, you'll see some examples of them, and you can really make the most of our time together. Guys and gals, as a human being, I know things are difficult right now. It's scary, it's chaotic. My heart goes out to everyone being affected by this. So I'm pulling for humanity right now. I'm praying for everyone. I'm making sure that we stay positive and keep pushing through this. But as a trader tomorrow, my job is very simple. I cannot let my personal emotions and my opinions be trading for me. Tomorrow morning, we're going to get there early. We'll prep the charts again, go over our rules, and we're going to We're going to execute with ruthless discipline this week, right? There's no spot for emotions, unfortunately. I know our personal lives are chaotic right now, but my job tomorrow in the trade room is to put the blinders on and execute, execute, execute. If you're with me, I'll see you tomorrow morning. If not, we'll see you back here tomorrow night on the next edition of our nightly newsletter. My name is Joseph, as always. Be well out there. Be nice to each other, will ya? Everyone's battling this in different ways right now. And be here next time. Adios, amigos. Bye-bye for now.